What is up, everybody? Welcome to the Crypto Cabin. My name is Tom, and in today's video we're going to be talking about the Bitcoin crash. What's going on? Is the top in? Everybody's asking that question. So without any further ado, let's jump on in. Alright, so here is what the Bitcoin chart looks like at the current moment. Holy smokes. So in one single 4-hour candle, we had a drop of 17%, over 17%. There's a lot of people saying or assuming why this happened. There was a power outage somewhere in China that cut the hash rate, and that is somewhat correlated to this. There's a lot of other stuff about, FUD and regulation in crypto and Turkey banning crypto, stuff like that. Regardless, maybe it was one of those things, maybe it was a combination of all of them. Regardless, we did see this break to the downside, and I was talking about this the last few days, about this ascending wedge that we had going here, saying that it was typically a bearish pattern. I was looking for a bounce around here in order to have it stay in kind of bullish for the shorter term. We did break down below that, and now we've gotten a pretty good recovery back up, but we definitely obviously went extremely bearish for that 4-hour time frame. You can see over here there was actually over $300 billion wiped out of Bitcoin liquidations in less than 24 hours. So that is extremely crazy. Hopefully you weren't one of them. Hopefully you were responsible and were setting stop losses and didn't have your entire account liquidated. Maybe you got stopped out, which is way better than losing your entire account. Another thing that everybody is talking about is the pi cycle top indicator. So traditionally, this is something that has hit the top of the market, or when these two lines cross, basically we have a shorter daily moving average and a longer daily moving average. And when the shorter moving average comes up and crosses the longer term moving average, that is typically a bearish sign, and it has predicted a local top. Now, I've heard a lot of people say that this was made in retrospect afterwards, like after the 2017 top, in order to fit the other two tops back here. Regardless, there is that narrative that this top could have also been part of the reason as to why people were, why the price dumped as well. Because typically this is within 3 days. Within 3 days of it crossing is when typically things have dumped in the past. This is 5 days, I guess, afterwards, but still reasonably close. So maybe that is a narrative out there as well. However, I do not think that this indicator in and of itself is significant enough to indicate a complete top for the bull market. So there's a few reasons why. So one of the reasons is this guy, Willy Woo. He is more of a on-chain analyst for Bitcoin, and basically here's what he is saying. You can go and take a look at this. This was a tweet that he made, but basically he is saying that this cycle we do have mania, which is supported by fundamentals. So the cross happening right now, while the price is very close to the fundamental floor, unlike past cycles where it has come high above the fundamentals. So you can see how close to fundamentals we are by looking at this NVT price, which you can go check out. But basically he's saying this is not very topish at all, and I tend to agree. Another reason for that, for me agreeing with Willy Woo there, is we have all of these other top and bottom indicators on Glassnode here that you can take a look at, and none of them are indicating that we are at a top. So the pi cycle chart indicator is 1, but there are these other 5 that are not yet flashing. So the net unrealized profit and loss, which normally if this is at 0.75, that is going to indicate a top, but we are actually trending downwards and we're at a 0.66, and we never actually got to that 0.75 level. So we've always stayed below it, and now we are trending down, obviously with the price coming down. The stock to flow deflection normally would need to be at a 1.0 in order to indicate a top. We are not close there, and again, it is also trending down. Another one of these indicators here is the MVRV Z-score. So when we take a look at that, we can see that in the past, in the market cycle tops, it has gotten up extremely close to this red box up at the top, even gone all the way up through it, and we are not even close to entering into that red box at this point in time. So the MVRV score is something that is used to identify periods where Bitcoin is extremely overvalued or undervalued. So if we would come down into the green, it would be considered extremely undervalued. If we come up here into the red box, that would be considered extremely overvalued. So as you can see, we are not anywhere close to that one. The next indicator that we can look at is the Puell multiple here. So this one, again, we've got this red box at the top, and whenever we come into that, we can get a fair ways into it or even through it, but when we've come into this box, then it's time to maybe start getting a little bit concerned. But as you can see, we had this huge dip down here recently, and we never really got that close to it either. So this deals with Bitcoin's miners and their revenue. That's what that is taking into account. You can, again, come and look at all of these on Look Into Bitcoin or on Glassnode to learn a little bit more. The last one here, that is a top bottom indicator, is the reserve risk. So here it is, and basically it allows us to visualize the confidence amongst long-term Bitcoin holders relative to the price. So basically, how confident do you feel that it is still going to go up or still has potential at that given point? As it stands right now, you can see again there's these red boxes and green boxes. So when the price would, or when this line would come up into the red box here, it would tell us that your confidence is not so high, right? That we would need to, maybe that's obviously when people are starting to sell off. But when it's down here, people are, more willing to buy and get into it. Right now, we're kind of, right in the middle. Nothing crazy going on. So none of these other 5 that have been very good at predicting cycle tops are flashing. The only one that is flashing is this pi cycle top indicator. Another thing to look at here is the fact that we have been within the top here for quite some time. So within, 10% of the top for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So typically the market doesn't give you that many opportunities to get out near the top or within that close to the top, I should say. So if we take a look at, the cycle from 2017, this was 1, 2, maybe at the most 3 weeks where you were within that percentage at the top. And if we zoom in here on the 2013, 2014 cycle, you can see again that we had a very steep drop off that was from December 1st to December 22nd, so only 3 weeks. It did come back up again, but after that, January 5th to February 9th, so again, like a month. So normally it doesn't give you that long to, cash out near the top, especially as we have right now, right? We've kind of been hovering around this $60,000 mark for a long time. And finally, you guys, you got to come over and watch this video by Benjamin Cowan. I'll put the link in the description below so you can easily find it. But he's basically showing here how these are all the days where Bitcoin has dropped by 5%. And then he moves along to talk about how, okay, there's 292 emergencies. So if every one of those was an emergency, right, there would be 292 of them. And then, if that's not enough, here's the daily 10% moves, 10% or greater. Again, 87 emergencies. And it goes on to say that we are right on track with all this stuff. So go watch what he says, because if everything's an emergency, then nothing's an emergency, right? So this is nothing different than what has happened in the past before. Like I said in one of my previous videos, even if we do see it come back down, I think I talked about on the daily, if we do see it come back down all the way to touch this blue line here, which is the 21 weekly moving average on the daily chart, we're still fine. We're still bullish, and that is a nasty wick down, which is why all those liquidations happened. But we have gotten a pretty good bounce back up since then. So as for right now, I'm staying patient still. I'm not sure exactly where I will want to get in at this point. You could have gotten in down here around 53.3. That obviously would have been a decent play on the way up. We are running into a little bit of resistance here at this line here, right about 57.2. So we'll need to see what happens here. It is possible that we kind of come back up almost to retest this trend line, and we could drop back down. But there is some pretty significant support right here around this like $50,000 level, and as well at the $47,000 level. So I personally can't see us dropping too much further down below, I guess in between these two lines here, the 50,000-ish level and 47,000. But like I said, we will need to see. Thank you so much for sticking around to the end of the video, you guys. And as always, there are going to be links down below to sign up bonuses for things like Femex, Bybit, Celsius, BlockFi, Coinbase, Crypto.com, a bunch of places where you can buy cryptocurrency, earn interest on cryptocurrency, trade your cryptocurrency. There's even a tax software down there for you as well. If you use my links, you obviously help out the channel a little bit, but you get a little bonus as well for using them. So that is greatly appreciated. And as usual, let's get it.